Yep. What going on? It's your boy Jeff from the Same Difference Podcast here with another live episode of the Same Difference Podcast. So we have a wonderful guest backstage waiting. I'm ready. I'm prepped. I'm ready to go to teach y'all about crypto. He's gonna teach me about it too because I've done my little crash course, my little crypto for dummies thing, my little training, but I want to get more into it. So I have a ton of questions also because I invest, but not necessarily in crypto and Bitcoin and stuff. Uh, a lot of us, 401ks and stuff, they've diversified your portfolio for you. So that's the only thing that I invest into currently, but I want to see if maybe I'm missing out. So I hope that y'all gonna learn a lot because I know I will. Get your questions ready. Pay attention, please. And he's backstage. We're gonna bring him out. But first, what we gotta do? We gotta roll this beautiful bean footage. Yo, there he is. There's that guy.
Yeah, what's going on? What's up? How are you, man?
Good. Thanks for coming on. I'm sure you're a busy man. As some may know, I got a question offline from a follower of Same Difference asking about, hey, you got any, you know anything about Bitcoin and crypto? I want to get into it. And I ain't in that space. So I was like, you know what I'll do? I'll put a feeler out, see if there's anybody who maybe could come on the show and explain it to all of us. And your name was 70 to 85% of the you were highly recommended. So we want to thank you. You go ahead and introduce yourself to the people.
Man. Good night, everybody. Good night, John. What you saying? First of all, I want to thank you for inviting me to the podcast. Like you said, a lot of people recommended me. That's because I've been spewing this since 2017 in reference to getting into Bitcoin and cryptocurrencies. My name is Liam Perkins, born and raised here in the Virgin Islands, St. Croix. And my goal has always been to educate folks on finance, especially when it comes to furthering, whether it's in stock market, crypto market, or just general finance. I believe that if we continue to educate everybody about finance, we'll be out better. So that's my goal. So that's what I'll do. Right now, I have a book that's coming out for the next generation, which is financial literacy for the next generation, called Value Your Future, launching on September 27 here on St. Croix, but also on through Amazon, through the website at myvalure, myvalure.com. That is myvalure.com. And basically it teaches students from 6th to 8th grade about financial literacy. It starts off with a young boy named Anthony who wanted to buy a gift for his friend, but he didn't know how to. So throughout the book, he learns about finances, and then he also learns things on the side. So he learns about wages, budgeting, assets and liabilities, the stock market, the crypto market. He learns about houses, how to buy real estate, credit scores, credit cards, debit cards, insurances, how to buy a car, and life insurance. And all of that is encompassed in a book where the person reads along as if it's a storybook telling. So yeah.
Thank you. So don't worry, folks. We'll get more into that, and we'll put links and stuff in the comments and all of that, so you can get your own. And we'll talk about that. First, we need to get into this crypto because I got questions, and I hope y'all got some too. So first and foremost, you have the book going out to 6th to 8th graders. At what age do you think you should start talking to children about investing?
So studies show about teenage, but I would say preteen, anything between around 10 years old, they kind of understand what money is, because that's around the age where they're kind of like, yes, mommy, daddy, buy me this, buy me that. So they kind of need to learn the understanding of money just doesn't appear. That's when you have those kids who'll be like, yeah, my daddy to buy everything, and they're not knowing that that money actually comes from actually working. So it's like
Facts.
you need to know prior to how your parents make the money. So having them understand that money just doesn't appear. They actually have to work for it. Kind of puts them in a mindset that, hey, get ready for this kind of upcoming lifestyle.
Nice, nice. And what do you think, in your experience, because you've been doing this for a while, what should be the first investing tip or like strategy
For a kid or for like adults.
for a child?
So for a child, I would say chores. Chores would probably be the best way of doing it in the sense of, hey, you do this and you get paid for this. Because now you get to make them understand how or what level of work receives money. So if you say, hey, I want you to wash the dishes and you give them quote unquote $5 versus if I want you to mow the lawn and I give you $20, they can understand that certain skills deem certain amounts of money versus skilled labor versus just regularly doing something. It kind of also helps you to say, hey, now that I'm giving you money for these chores, don't come and ask me for no more money. That kind of makes them understand that budgeting matters. Because if I give you $20 for your chores and then you ask me to buy you something,
True.
then I could tell you no because I already gave you money based off of what you worked for. So in essence, you kind of teaching them not just about earning money, but also that they have to budget for what they want and what is most important for them. So I would say chores will be the number one thing that you can use to educate them and so forth how to manage or receive money.
Nice, nice. Thank you for that. Now, usually when people talk investing, right, we should know by now that the key to investing is starting early because
Yes,
investing is about over time.
correct.
Now, being that I'm an older guy and I can't backtrack or go back in time, what do you say to those that are a little bit older than in their 20s, the 30s, maybe 40s, and so, and now they really want to get into it? Maybe they have some more free money that is freed up. What would you say to them?
Yeah, that's a great question. What would a older person do? You said it on your head. You hit it on the head. Just start. No matter what, the longer you take to start, the less that you have of opportunity of making money. So just starting or whatever it's just starting to find out information or just starting to invest. I would say start and start small. So if you're thinking about investing, the best place to go is the stock market for anybody that's starting off. The reason being, when you're starting off in the stock market, it kind of gets your feet wet and it kind of shows you the ins and outs of how to do it. The number one thing you should be investing in is the S&P 500. What is the S&P 500? The S&P 500 is the top 500 companies within the United States of America. Basically, your Amazons, your Googles, your Meta, your Facebook, I'm sorry, your Tesla, Nvidia, those kind of stuff, and it ranges from Walmart, Target, all this kind of stuff. That's the top 500. So once you invest in that, you're basically investing in the United States economy. With that, the S&P 500 usually gives you about 8% adjusted for inflation each year. So if you do that at the beginning of your journey and you kind of see how the ebbs and flows kind of work within the market, you will do a few things. One of the things you will do is you will understand that it's not just a, hey, get quick rich scheme, and then you also get to learn some experience of how markets work. When you have good days in the market, you have bad days in the market, it kind of will take away from you being anxious of how money is being used and going up and down. So how do you do that? You sign up for a brokerage. What is a brokerage? A brokerage is where you put your money into to buy stocks. The same way how a bank account allows you to house money in a bank account, a brokerage lets you house stocks. So you sign up for the brokerage. The brokerage has a plethora of information of how to buy stocks and whatnot, as far as from point A to point B. But for the most part, you want to invest in a what we call an ETF, exchange traded fund. An exchange traded fund is essentially a fund created by a company that invests in other companies. So let's say that you decided to give me money to invest it for you. You familiar with basketball? You're a basketball fan?
I wouldn't say that I'm a fan, but I understand the
Okay, you
terms.
understand it? Okay, cool. Let's say that we so I created a basketball team, right? The best of the best. And on my team I have Steph Curry, LeBron James, Tim Duncan, Shaq, and Kobe. Who do you think will be the best player on that team? Just based off of those five. It's pretty hard to decide,
Kobe,
right? It would be
Kobe,
hard to
maybe.
decide, right?
Uh,
Maybe Kobe, maybe LeBron. It would be
yeah.
hard to decide. So what an ETF is basically just that. They basically invest in the top five in top companies, and then they give and you invest in them. So instead of you having to choose between which basketball player would be the best, that company would do all of them at their um, percentages, and then you basically invest in that company.
Okay.
So it takes away from you having to choose because you are now invested in all of them versus just one. And then the best thing about them is that they do all the work for you. So let's say showing that Steph Curry gets injured and then your 6 months is Durant. What would happen is they will adjust the numbers so that it's no longer that you're invested in Steph Curry. With Steph Curry, you're now invested in LeBron, KD, Kobe, Tim Duncan, Shaq. So it will adjust it for you. So instead of you having to work or think of who and what to invest in, it does it for you. So the play is, hey, you just continually point in money into this company. This company does it for you, and then you receive the benefit of that. What it will do is when prices go up, let's say Shaq and LeBron goes out for 30, 40 a game each, back to back. Now, that's good for your portfolio, so it'll go up. But let's say that Tim Duncan was in a slump, Kobe was in a slump. Those numbers are going to negate because Shaq and LeBron is doing real well. So it kind of makes it balanced and it kind of gives you the opportunity to not be so um, invested in just one company. So it diversifies your portfolio and it helps you to maintain a better advantage of gaining money versus just going down whenever the market is really, really bad and so forth.
So
But yeah,
what's the difference between the ETF and what your 401k is doing, or are they linked?
they're basically the same. So a 401k is basically a ETF in a sense of your 401k is investing in companies just based off of how um, they deem the best possible. So most 401ks are going to be invested in the S&P 500, which is the top 500 companies. And there, if you have a 401k that may be invested directly into um, tech stocks. So your 401k is just basically money you putting in monthly, and it's going to do the same thing that you're doing on an ETF. So for me, I would advise people that have a 401k, if you feel that it's easier for you to do it that way, stick with it. The only reason why I would want you to have a 401k is for two reasons. One, it's tax deferred, meaning you're either going to pay your taxes now, where in the further on, you won't have to be paying it when you take out the money, which is a Roth IRA usually, or you're going to pay your taxes upfront and it reduces your taxable income, which is a traditional 401k. Now, those differentiate in reference to how and when you pay taxes. The reason I would tell you to do that is because it's a lot easier for you. Now, if you are receiving a what we call a matching, which is some companies give you like 1 to 3% of matching, which is money directly from the company into your account based off of your contributions to your 401k. With that, it helps you build more money versus you just putting your money yourself. So that would be my reason for telling you to do a 401k if it's easier or if it's matching. But if you want to venture out and do it on your own, I would say it would be more beneficial for you to do it on your own. Number one reason is to take it out. If you take out your money from a 401k before the age of 59 and a half, you'll be penalized about 10% for taking out that money. Whereas if you have your own account, you'll basically just be paying the taxes on that money, which is a lot less than what you would be paying for taking it out too early. So if you do it your own, you'll more than likely have less of a issue and so forth in a long period of time. But yes, 401ks are a great way to invest because it's a lot easier and it takes the It just takes the hard work of learning and everything and so forth.
That's what's up. So big up to the people doing the 401k, and always, if your company matches, I think you should.
Make sure you get that much at the very least. If you're gonna take that 401k, make sure you get that much in because it's free money basically.
Now let's get into the topic of the night. Tonight's topic is crypto. Crypto is listed as a decentralized digital or virtual currency that uses cryptography for security and operates on a distributed ledger technology called a blockchain. Unlike traditional money, it does not rely on a central bank or government and can be transferred directly between users through a peer-to-peer network. Crypto is often seen as an alternative asset for investment, with its value fluctuating like stocks, though it is not as regulated or insured. For the people who do not deal with computers and do not deal with stocks, what did I just say?
You basically said that this is money that is digital, that can be sent from one person to the next without government interference. Point blank period. So
doesn't government interference kind of protect us, or shouldn't it though?
Yes or no. So more recently it has started that way, but originally it was created in the sense of from me to you with other persons looking and verifying, and based off of that we are good to go because they verify it, so you don't have to trust me, I don't have to trust you, and next person is verifying it for us. So the government got whiff of it and they started to say, hey, this thing is really, really good, it's really up there in numbers, people don't want to sell it, and then they were like, well, if we can't beat them, we have to join them. And in joining them, they basically started creating regulations and laws to ensure that person are doing right and making sure that the money that is being moved from place to place is being tracked. So cryptocurrencies wasn't the first quote-unquote digital currency to be made and so forth. Fun fact, PayPal was actually supposed to be like a cryptocurrency. If you're a documentary, you can basically look up for this group called, they used to call them the PayPal Mafia, right? So the PayPal Mafia was people that created PayPal and stand out to do their own thing. You have from there like Peter Thiel, Elon Musk, and a slew of billionaires that are now billionaires that came from the PayPal startup. PayPal was basically started as, hey, let's do digital currency, and the government got a whiff of it and were like, nah, you can't do that. So with that, crypto and Bitcoin became something different because what Bitcoin did to maintain or become as important as it is was its, I won't say secrecy, but it was anonymity. Um, Bitcoin was basically created by a group or a person called Satoshi Nakamoto, which is the creator of Bitcoin. I'm gonna say he just based off of what it assumed the person is. He created it with a sense of basically four factors. Number one, being transparent.
Are y'all seeing me? Did we lose him?
Hear me back again?
Oh, I was wondering if it was me or you.
No. I got a call. I'm sorry. Apologize.
All right, go ahead, sir. You were telling us about Satoshi?
Satoshi, yes. So Satoshi basically was an anonymous user who created Bitcoin. And he basically wanted just about four different things, right? So peer-to-peer, basically from me to you, and without having to go through government channels. So we got, and then number two was borderless, meaning if I'm here in St. Croix, you're in St. Lucia, you're in Jamaica, you're in China, it doesn't matter. As long as I can get your address, I can send from me to you. And then from me to you, it basically it just goes based off of the blockchain. Um, then he also wanted to have a maximum supply, meaning the US, any kind of US back currency is called fiat, right? FIAT, whether it's the US dollar, the Great British Pound, the Japanese yen, the Chinese yuan, all that stuff are considered fiat. They're government backed. So with Bitcoin, it was basically backed by no government, meaning no government can stop it. Now, the reason why he was able to succeed is because it was anonymous. So you can't stop what you don't know. So if you said, hey, we want to stop Bitcoin, you have no place to go because this was an anonymous person that created it also. So it was the anonymity of having him as an anonymous person, the peer-to-peer, um, maximum supply, and no company or country owned it. So in doing so, they basically created the first blockchain, which is Bitcoin. Now, Bitcoin is blockchain, but blockchain isn't Bitcoin. Reason
Right.
being, you have a blockchain that's not Bitcoin, like Ethereum, XRP. But Bitcoin is synonymous with blockchain because you have to have a blockchain to run Bitcoin. Now, blockchain in itself is two different types, but it all resolves around the same pretext of we creating this ledger, or we're creating this way for everybody to see it, whether it's me, you, somebody in Africa, whatever. Anybody can see it and anybody can track it, but nobody knows who it is. So it's not that it's saying Leon is sending it to Ja. It's saying wallet address ABCD123 is sending it to you XYZ456. So with that, what you kind of get is anonymity, but everybody can see it. So it's not. So it's you don't you won't understand that I have this amount of Bitcoin or you are receiving this Bitcoin. It just shows that somebody's receiving it or somebody's taking it out.
Yeah, you can see you're tracking the transaction, not the
Correct.
people. The
And
people
the
are not.
people. So
We
that
got
became very
questions coming in. We get
okay.
questions coming in from Otis, and I don't
Yeah,
want I don't want to lose it because he hit me with like five while you were talking.
that's no
Um,
problem. But
let me start with the one that aligns best. Which platforms are easy access for regular working people?
which platforms are regular access? Okay, so in order for you to have, so I'm gonna continue on with the explanation, and then we'll get to that because it will kind of make more sense when we reach to there. Okay, so the anonymity kind of helped with implementing it and so forth. So when it comes to blockchain, you have two different types of blockchain. You have proof of work blockchain, and then you have proof of stake. Proof of work is what Bitcoin works on, basically. So proof of work means that in order for me and you to transact between us, somebody else has to verify it. So those verifiers are called, um, the name can actually, those verifiers basically are the ones that run the chain. So their first task is to say, hey, I want to send money from me to John. What they're gonna do is say, hey, Leon, we're gonna check to make sure you actually have one. So they're gonna check my account and say, hey, you have one. Then you're gonna say, hey, I want to transfer it to Jai. They're gonna say, hey, Jai, he's sending it to you, verified on that end that it goes from me to you. So they just verify it and they make sure that it goes well. So now it's not just one person though. It's maybe 30, 40, 60. In order for that transaction to actually go through, at least 30 to, I think it's, the last time I checked it, was like 30 to 50 people or 50 companies or verifiers have to verify that I have one and I'm transferring to you, and then you have it after it's finished transferring. What that does is ensures that the blockchain continually makes the transactions visible, and it's also if irrefutable. So they verify it and they make sure that it can't be altered or changed. Once that is verified and you receive it, then from there you will basically be able to have that one Bitcoin and do and use it as you feel. Now with Bitcoin, it's kind of slow because we only do three transactions per second, so it's kind of slow. But what that does is ensure that it is valid and no changes can be made. So once you, so that's one part of a blockchain, the verification and the transfer of the money and so forth. But in order for Bitcoin to actually have been given to the people, they have to have something called Bitcoin mining. Just like if you were going to mine for gold, you would have to mine for Bitcoin. Basically, the creation of Bitcoin. Bitcoin miners are basically doing what you said earlier, um, basically a cryptographic problem, and in completing a cryptographic problem, they receive Bitcoin. So today I put on my computer is doing the processes, and then it finishes. and then like receive a Bitcoin. That's how it was in the past. But
Yeah.
now you have to have like a whole company and a big rig and a bunch of computers to do it because competition, right? If I at the beginning it was a small computer, you could do it and you can make some. But now it takes a lot more processing power to do it, which is why most people can't afford to do it at the moment.
Yeah.
But those processing powers basically would do the cryptography and then receive a Bitcoin. Once they receive the Bitcoin, they could do two things. They could hold on to it or they could sell it. When they were selling it, they're selling it to a crypto exchange or to a person. Selling it to a crypto exchange is basically a company like that person asked, and that company will basically sell it to whoever they want to for a certain price. And that is where you derive the price of Bitcoin. Basically, hey, this is something that we worked so hard to get because we were doing cryptography. And do you want to buy it based off of the pretext of how much Bitcoin is worth?
Hello. Oh man. Things running synchronous.
Yeah.
Yeah, break up.
You good?
You good now?
Alright, cool. Sorry. I don't know why I cut off, so I'll go back a little bit. So the last thing is, so the company basically would give or sell the Bitcoin based off of whenever they need to make money or somebody wants to buy it at a price. So let's say they create. So the company that you should buy from, or in my opinion, is only two of them that I really would like persons to buy from, which is crypto.com, CRYPTO.com, or Coinbase.com. These companies and these apps or websites that you go to, they basically have, for the most part, the cryptocurrencies that you would want to buy. Coinbase.com is the number one crypto brokerage on the planet right now. They are a publicly traded company, and they've been around since that's about inception. So how it works, you sign up for either one of those companies, and they will give you a wallet. The wallet is basically where you house your cryptocurrency, and you once you sign up, you will basically link your bank account. Once you link your bank account to it, then you will basically use your bank account to purchase those Bitcoin, any cryptocurrency that you want to.
So would that be like? I'm sorry. Would that be like if you sign up for like Ameritrade or Robinhood to trade some stocks? Is that similar to that?
Yes.
Okay.
Correct. So the reason why I wouldn't advise persons to get into stock accounts or stock brokerage to buy cryptocurrencies is because you don't technically own the cryptocurrency when you buy it from them. What does that mean? So in the stock market, when you buy a stock, you basically go house it on a brokerage, right? And a brokerage holds on to your stock. That's going to be the same thing if you use a stock company to hold your cryptocurrencies. They're going to hold on to the cryptocurrency. Versus if you buy it from a crypto exchange, you actually own and hold it. Why does that matter? It matters because when you actually have it yourself, you actually have possession of it. Whereas if a company has it, let's say that company goes bad, you can't really take it out because they have it. They technically own it. You just bought it, but they hold it, and it kind of becomes muddy in water because it's not really yours unless you actually own it, unless you actually have it in your possession or so forth. So it can get tricky in a sense. So that's why I would say Coinbase.com or Crypto.com or so forth.
When you go through Crypto.com or Coinbase, do you own it now? That's yours now?
Yes. It's going to be within your accounts. It's going to be what we call your crypto exchange account. And you can basically hold on to it there in that crypto exchange account. So there's 3 different ways for you to house your cryptocurrencies, right? There's on the exchange, there's a cold wallet, and a hot wallet. The crypto exchange, basically they will hold on to it on their end, but it's in your wallet. So let's say that something happens with a company, they would still have to pay you back or pay you or give you that cryptocurrency. That's why I said those two companies, because they're try tested and prove for the long period of time. Whereas a new company might pop up and they might not be around for a long time. So those two is the only one I would recommend. Now, a cold wallet is anything that's not connected to the internet entirely. So there's companies out there that basically have cold wallets, which will kind of be like a jump drive. So you will basically transfer from your exchange onto this cold wallet that you could have in a safe, you have in your closet, under your bed, in your dresser, X, Y, and Z, as long as you have your password to get onto that cold wallet, and you will have it in your possession. The beauty of having a cold wallet in that sense is I can move from here to Ethiopia, and as long as I have those passwords, I could use that jump drive and move over there, and all the money, all that crypto that's on there will be there as long as I get the access to it. So that is one of the major differences between, like I mentioned earlier, with gold. The gold transferring, let's say you had $100,000 in gold, transferring from St. Croix to Ethiopia would be very, very troublesome. Whereas you travel from here to Ethiopia with a jump drive, nobody's gonna really question you and so forth. And
Is
that's a
it
cold wallet.
technically still on the exchange, or it's
No,
now like physically
now
located with you?
yes, now it's physically located with you. The next one is our hot wallet. A hot wallet is basically anything connected to the internet. So there are apps or companies that basically have those cryptos directly available for you to get it directly off of the exchange, but it's going to be connected to the internet. The reason why those two cold and hot matters is just how technology works, that somebody can try to hack in and so. There haven't been major hacks where it comes to cold wallets, but as anything is connected to the internet, it's easier for it to try to get manipulated and so forth. So having it in a hot wallet, it is still safe, it's just less safe than a cold wallet.
Makes sense. That makes sense. Van Ace is asking, so stay away from startups.
Yes. So the cryptocurrency is what 10 plus years. So for you to go into a company that just started, you're basically asking, would you rather a rookie versus a veteran? You know what I mean? You have a company that's tried, tested, and proved, and they're doing well. Why would you want to go with something that's starting up? It will kind of hinder you in the sense of where is this company going? There's a lot of companies that start up and fail just because they don't have the opportunity to grow, because big companies take little companies, right? But the enticing thing to always be, hey, this is a small company, we have a lot of room to grow, you might make more money with them. But I don't want persons to do that, because at the end of the day, it's a lot harder for you to maintain. It's going to be it's more dangerous, I would say. A lot of people lose a lot of money by going into those long shots or those long plays, and it does just never works out and so forth.
Makes sense.
Yeah.
And Otis has a few other questions. I don't know if it's
Right.
too soon or not, but can you explain what stable coins are, such as XRP?
All right, cool. So stable coins. So stable coins, first of all, XRP is not a stable coin. XRP has a stable coin, but it's not um, a stable coin. A stable coin is essentially a coin that is pegged to fiat currency. So it's pegged to the US dollar usually, meaning this coin is $1, and is one coin is equal to $1. So instead of you saying a Bitcoin is worth 117,000, which is 170,000 over here, a stable coin is the same. So stable coins are supposed to be backed by fiat currency or assets that are US dollar based. So a stable coin like um, what's the number one? Tether, right? Tether is the number one stable coin. Basically, if they have a billion tethers, that means they have $1 billion worth in their bank account. So if you purchase Tether, you're gonna have $1. It's basically gonna be the digital version of a dollar. Now, what makes that better than a than a dollar that you have right now? It is easier for you to make payments cross border or send to somebody. So, like right now, let's say you had to send money to St. Lucia, you would have to technically have a transaction through Swift, right, and or through MoneyGram or whatever this kind of stuff is, right? And it will be a lot harder for you to transfer that money because they have a lot of government backing or a lot of I guess you could call them guardrails. Whereas if it's transfer tether from me to that person in St. Lucia, it's basically going to be sort of instant, and it's not going to be the value of that money is not going to change. So when you talk about money from US dollar to when they use in St. Lucia, that exchange rate is going to be different. Whereas if I transfer you money from here in tether and you there in tether, it's still going to be the same dollar and so forth. So stable coins are gonna be the new wave of how dollars are used, right? Because with this new president, they created this thing. They passed a law, basically called the Genius Act, which makes stable coins legal in essence, right? So what they're wanting to do is use stable coins as the way of transacting digitally. Good, you will be able to transfer from place to place, person to person. But if you thought using dollars was traceable, this can be extremely traceable in the sense of they could know exactly how and when you purchase us about any and everything.
Doesn't
So,
that kind of defeat the purpose though of like why they
which
created
is
it?
which is why cryptocurrencies is great, which is why stable coins are not. Because stable coins, which is why Bitcoin is not. So Bitcoin is semi-anonymous. Anonymous in the sense of they don't know who you are unless you say who you are, right?
Yeah.
But through anything that's computerized, you could basically find somebody, right? Because in order for you to sign up for an exchange to receive money, you have to put in your bank account information and those kind of things. So regardless of what, they could basically find it. It'd be a lot harder for them to find it. But with a stable coin now, it's a lot more guarded because that is an actual company. So that company could say, hey, this account was doing illicit activities, they could freeze your account. With Bitcoin, they can't freeze your account because there's no owner for them to go and say, hey, Bitcoin, freeze this person account. They can't, but they could do it with Tether. But they can't find you because IP addresses and so forth. So everything has an IP address. So if you bought something and your IP address pops up, they'll be able to say, hey, trace it back to the IP address and so forth.
Can they
Obviously,
freeze the
there's
wallet?
yes, yes and no. So they can't trace it directly, but they can basically trace it based off of how you sign up for it. But just like anything, you know, I mean, cops and robbers, they always have the push and pull. There's ways to do it. It's just more of are you doing illicit activities? That wouldn't be the best way to do it through stable coins because that company could basically say, hey, the US government could come and say that wallet has been doing illicit activities, shut it down, and they will shut it down. And it has happened, and it will happen because they're a company. Their job is to make money, and if the government come and say, "Hey, X, Y, Z," they're going to do it and so forth. So yeah,
Or
but
this or
stablecoin is basically going to be the new wave for the dollars in the future and so forth. Point
when
blank.
we go fully digital.
Correct.
What did Fed cuts yesterday mean for investments?
What did the Fed cut yesterday mean for
Yeah,
investments?
the
It
interest rate
means
cuts.
that the interest rates has went down. It means two things. It means that the economy was doing bad, and we kind of want to make it to where persons can afford more. But it really isn't that bad. It really isn't that important because there was only 25 basis points, which is like 0.25, which means that it's not that big of a cut. It was already supposed to have happened. It's just like they officially did it. Now, for an investor, that basically means that there's going to be less money you have to pay back when you're paying your interest. So it's a better time for somebody to borrow money because
Yeah.
now instead of them having to pay, I think it was like 6.50 the interest rate was. So now generally they'll have to pay back 6.25 versus 6.5. Now that makes a big difference when you talk about longevity or the amount, but in essence, it's not crazy because we're still technically high. So it helps alleviate the amount of money you can borrow or will borrow, but it doesn't. It's not where we kind of need to be, really and truly. Now the reason why it's still high is because so the interest rates are used in two ways, right? It kind of helps you to deter persons from borrowing money. So if the interest rates was like 2, then more people will want to borrow money. But if it's at 6, less people will want to borrow money. So it kind of helps you to not borrow money until the US economy gets back on track. So until we get back on track, having a high interest rates helps people to not borrow money. So that's why it was one of the reasons why it kind of helps. And then two, it just basically helps with the sense of the GDP. So that's the money that the banks and so forth can make versus how much they will make just borrowing money. So they still need to make money in order for the circulation of money to go around and so forth.
Thank you. Now, where does crypto fall into an investment strategy?
Okay, so crypto is what a lot of people will consider a speculative asset, right? So speculative assets meaning it shouldn't be your first go-to, technically. So if you're a person that's starting off, is crypto someplace where you should go? It depends on your risk tolerance. But for most investors, they will say no. They will tell you go to the stock market first or buy a investment property. Me personally, it's all about what you are willing to risk. Crypto has been what Bitcoin has been the best performing asset for the last decade plus. Meaning, if you have put $10,000 in Bitcoin, you gonna make way more than if you put in gold, way more than if you put in a house, way more if you put in the stock market. So the risk of it was very high in the sense of how much you would have maybe potentially lose, but at the same time, you would have made way more than if you are putting any other asset. So if you want to start off in crypto, I would say yes, but just know that the market is very volatile, meaning it can have high swings going up and down, and yeah, really make you feel like, hey, I don't want. It's been some stressful times. There was a time where Bitcoin was at $20,000. A lot of person bought in at 20,000, and within 3 months it went down to 5,000. So if you are putting $20,000 and then a couple months later you saw your crypto at 5,000, some people couldn't bear it, so they were like, "Nah, I'm out." So they sold. But had they hold on, they would have been up what $100,000 basically. So the swings are very crazy, but the gains are awesome. Now, with the institutional investments, meaning big companies and big money investors in the space, the swings are not going to be as crazy because they don't want to lose money. So I can't see it being to where we have big drawdowns from like 20 to 5 or like 70 to 30 anymore. So if we do have drawdowns, it won't be that extreme anymore, but we still will have those fluctuations and so forth. So as a beginner, I would say it is a good place to go if you have a high risk tolerance. Because I know people that will be like, yo, I lost like 3%, 4%, and let me be mad. And I'll be like, that's it? That's not a crazy amount, you know what I mean? But if you hold on for the long period of time, then you'll be all right. They said nobody that held Bitcoin for over 5 years has lost money. So take with that what you want to, you know what I mean?
So here's the thing. So one Bitcoin currently is $117,000. One
Correct.
is over 117K. As
Correct.
much as it has grown, is it even possible to get in and really make some real bank anymore, or we already missed the wave?
No, we still can make a lot. So the projection for Bitcoin is to be $1 million, and that is because
What?
where we at. So the Bitcoin um, market cap. Market cap basically means the entirety of how much is basically worth. Meaning, if we were to liquidate all of it right now, it would be worth, I think it's at $2 trillion, right? So $2 trillion. think about the housing market. The housing market is multi-trillion dollars. So if we're saying that we're at $2 trillion and the housing market is like 20 trillion, that's only 10%. So if we have 90% of growth left, then we have a longer runway to reach 12 million. Most rich persons or rich institutions, what we will call them is basically family money or whatever. They only allocating 1 to 2% into Bitcoin. So if you have a family office that makes that's $100 billion worth, right? And they only invest 1 to 2%, that's $2 billion. So if $2 billion from that portfolio is only invested in Bitcoin, what happens when it becomes even more legitimate and they move from 2% to 10% of their net worth? Now that price of Bitcoin moves from 100,000 up to 200, $300,000 easily because more people are invested in it. And then now that you have governments and institutions really buying into it and laws are being made because of it, that number really is very, very low compared to where it would potentially go. Then you couple on the actual luxury of having a Bitcoin. So right now, people are saying like, hey, they can't afford a Bitcoin. But when you have celebrities or rich people saying like, hey, I have a Bitcoin, and now it becomes bragging, and like, hey, I get 10 Bitcoin, then more people will want to buy it, and then the prices go up and all that kind of great stuff. And the great thing about it, like I said earlier, there's a limited amount. There will only and will always be only 23 million Bitcoins ever. So it's already projected that 6 million of it is already lost. So you have 17 million technically able to be bought or have, right? When it comes to Bitcoin, I spoke about mining, basically creating the Bitcoin. Right now, you can only make, I think, about every time a Bitcoin is able to be mined, it's only like 300 can be mined from the blockchain, right? So when that number cuts in half every 4 years, so it's called a Bitcoin cycle. So every 4 years, that number decreases. So this year is the Bitcoin half went from I think it was 700 to 350, and then from 350 half again, and then half again. That means there's going to be less and less available to mine and less able to be bought because nobody's going to want to sell it knowing it's at 117 and it could potentially be at $1 million. So now you have that essence of supply and demand, whereas the supply is very, very limited and the demand will just start to continually shoot up because everybody wants it and you can't get it and so forth. So projection wise, it's supposed to reach about $1 million and such.
Otis is asking, do you think Bitcoin will back the US dollar? Is that possible?
I don't think the US would do it. Reason being, they don't have. I think they don't have enough to do it yet. So, in order for you to say that you want to be backing your money based off of the US dollar, you would want to have the major control of it. You know what I mean? So, like the US would have to have. If I was a country, I would say I would have to have the majority of it in order for me to say because if you back your money on it, let's say Russia has more Bitcoin than you, then you just basically put yourself in a problem because now they have more than you. Now they basically kind of control how your currency works. So America has Bitcoin in their treasuries, but I don't think they have enough to say, hey, we're going to back our US dollars based off of it. What they're going to do though is transfer their money from what I think they're going to do, and reports have shown that is move from fiat money, which is the money, the dollars that we have now, to stable coins, because now that kind of moves them from having that big debt of fiat, and then kind of like will wipe the slate clean if they go into stable coins. So yeah, I don't think they will back it on Bitcoin because I don't see them wanting to have it on something they can't control.
Okay. Yeah, that makes sense. That makes sense. Do you believe sure that we're at that point where we can say Bitcoin will be around for the long term, because that's what's important with investing, the long term, right?
Correct. Yes, I could say for sure it's going to be here for at least 5 to 10 years. The only problem Bitcoin might have right now in the future is quantum computing, and that's like a whole different topic because the powers of quantum computing can definitely change a lot because again it's cryptography, but I think it's going to be around for 5 plus 10 years because it's no longer just between the normal everyday person. It is now between major institutions and governments buying it. The biggest company, or one of the biggest company in the world, $2 trillion into market cap, is BlackRock. Um, and if you want, do some research on them. BlackRock, Fidelity, those are like the major companies in the stock market, right? They've
Yeah.
invested 2% into the Bitcoin and the crypto space. They're they're not gonna lose money just because they're not gonna let it falter. If that makes sense. So for me, I think 5 to 10 years it's gonna be around and it's gonna become a lot more important for individuals and companies to have it as well.
All right. All right. Thank you so much for that, man. We
Yeah,
really appreciate it. You good. You good. You good. You good. You hit it all the questions and you ain't flinching. I love to see it. So
yeah.
let's
So
talk about you and what you're doing. Let's go into this book, sir. Can you tell us more about Value Your Future, a young investor story?
yes, so Value Your Future is a basically a book for the next generation when it comes to financial literacy. I created a book having conversation with my son about finance, and it became kind of one of those, hey, daddy's teaching it, so I can't really pay attention. So, but if a teacher taught it, then it will make sense. So my son is very, very intelligent. So when it comes to me teaching, I guess he just doesn't perceive it well. So when I created it, I wanted to make something that any students between like the sixth and eighth grade can pick up and understand why or how finance can matter to them. So it starts off a boy named Anthony. He wants to buy a gift for his friend, and throughout the book, he basically learns a lot of skills along the way. Starts off with him wanting to know how to make money, so he learns about wages, and then he basically wanted to buy a next gift, but he didn't realize that it was out of his budget. So he learned about budgeting, and then from there he started to learn a lot more things. So the book touches on wages, budgeting. It talks about assets versus liabilities. It talks about stock market, the crypto market. It goes into housing, whether how to buy a house, and credit scores, credit cards, debit cards, insurance, how to buy a car, and life insurance. And it basically is 15 chapters that covers the basics of financial literacy for the next generation. And it was one of the greatest things that I started to do because it felt like therapeutic in the sense of being able to give it to the next generation and have them understand so they don't make the mistakes that I have, and probably most of us have. He also speaks about. I also did it in a sense of how can I bring it into the schools. So I've been talking to a few schools in reference to how can it be implemented because I created a curriculum that basically coincides with the book, and a teacher, a parent can pick it up and have those understanding of how to implement it in their school. So I have been talking to some folks within the Department of Education and a few schools here locally to get it there. We're not 100% completed yet, but we are making progress on that. So my hope is to have it throughout the territory as a part of the Virgin curriculum and have students know understand the bare minimums of finance. And yeah,
Dope, 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 dope. Love it, love it. Yeah. Would you ever like teach at a school? Would you ever do that? Teach economics, finance, anything like that at school?
so teach like a class, probably not because I have some other goals I want to do, whether it's what is really the stock market and so forth. But I do want to, and I have been trying to, well, I will be doing like, I guess we call it pop ups in the school. Um, I remember going to school, and every year you would have a visit by the police officers, the fire department, nurses, those kind of people. And for the life of me, I don't think anybody's ever done finance. So I was like, man, you could never know if somebody really wants to go into finance because we don't start that at that age. So that is something that I'm working on, to go to different schools and speak about finance, because I know for me, um, transitioning from sixth to seventh grade, I did do a summer program that spoke about entrepreneurship. And from then is when I really wanted to be into finance. But there was never really a place or a person for me to know and understand. So it kind of was like, I was shoot up on the hip and never really could have find it. It's only because of like YouTube and internet age where I was able to find information and learn about it myself. So from there, learning about that, it kind of made me become where I'm at as far as finance. So I want to bridge that gap for that next generation so that they don't have um, that loss. They don't be lost in reference to learning or finding out about finance. I want it to be, hey, somebody has a inclination to be an entrepreneur. Let's hone them skills and those understandings from a very young age and so forth. So we will actually have some better businessmen and women within the Virgin Islands.
Otis is asking how can he get his hands on the book?
So the book is available for pre-sale right now on the website myvalure.com. That's myvalure.com. It's available as pre-sale. Use code pre-sale for a 20% discount. But it officially launched on September 27, which is next week Saturday. We have an event at the box in Christian said. Basically, you pay $50 and you can sign your kid up for basically what we're doing now, which will be our financial courses and introduction to it. And we basically have a kids investment club, and you will receive one of the books and for $50. Also will be available here in St. Croix at the Undercover Bookstore, Books and Gift Store. That's in Gallows Bay. And from that day on, so you could also be able to buy it on the 27th off of Amazon and any place where books are sold and so forth. So it is going to be available. It's just if you want to get pre-sale at a discounted price, you can do it right now on the website. But yeah, the day four, if you want to meet in person, have your kids sign up for the investment club, September 27th at the box from 3 to 6. And we'll just basically be talking like how we're talking about investments and helping those next generation of kids move forward with investing and finance.
Nice, nice. I'm glad that you are already getting out into the community and you wrote a whole book and stuff like that. That's impressive.
Yeah,
Congratulations on
thank you.
doing this because it couldn't have been that easy. You know what I'm saying? Book and think that it
Yeah.
would like boom, boom, boom.
Yeah, so if you look at the pages or the book itself, you see some of the actual. Let me see if I can show you. It's actually a very beautifully handcrafted book. I'll show you some of the pages. You can see. Yeah.
Nice. That is pretty. That is beautiful. I like that.
So it's very beautiful and in a sense of how it's operating. Like I said, it's a storybook, but it's also something that you can read along and gain information on. And within the book itself, there's also what I kind of like the most. Uh, Portions where it basically has like some check and learn, which you
Activities.
basically can have activities where a person, where a kid can learn and actually put some hands on it because I believe in reinforced learning. So reading it is one thing, but when you're actually doing it, it kind of helps you. So it kind of makes you better understanding and so forth.
Dope. That's dope, man. I want to keep your information because I'm cooking up something also in the background, and
Definitely.
hopefully, are you like, we'll talk about it. So cool. Look on your screen. Look on your screen. My value down by the contact Leon Perkins, email myvalure@gmail.com. Hope you can see that. And that's where you said they could get the pre-sale,
Well, that's the
right?
email, but yeah, it's basically the same thing for the web address. So instead of at Gmail, let's put myvalure.com, and they'll
.com.
basically be able to buy it there. We've had some sales already, so the book is moving, and folks are gonna receive it and have been receiving it. Yeah. If you need or want some more information, you can always shoot me an email and so forth. As far as adult classes and so forth, I've been having the question about doing it. It's just about me making some time for it, but it will happen within the near future, and that will be something that is not just crypto. It'll be everything as far as investments, which would be from the stock market, crypto market, startups, investments, them kind of stuff. You know what I mean? I just have to sort it out. I like to do things to make sure everything is sorted out first before I kind of plunge into it. Uh, if you do have some folks on the mainland have reached out and said, "Hey, how can I get this in? I guess schools in the states." If you do have a school or you have an administrator that you could plug me into, I'll be glad to reach out to them and give them some information, and I'll move from there. If you have a non-profit or you have a homeschool or you have anything of that sort, feel free to reach out to me. I have been speaking with some here in St. Croix, so it is plausible and it is possible for me and so forth. The 20% discount would be use code presale, PRESALE, no space, and you will have that 20% discount on either um, the hardback or the paperback.
All right. If you'd be so kind, sir, we really appreciate you coming through and giving us your time and giving us this information, answering questions for free. Can you please, y'all support the people that support you? Go ahead and share this live. Tell people about the book. Go ahead and purchase it. You can't beat a 20% off discount. 20%
Yeah.
off. So if you have children, Otis, go ahead and support the man. My Valure, myvalure.com, correct?
Yes, correct.
All right. And can
So
you go ahead and give
that's
us your final words?
so before I get the final words, I want to
Mhm.
make sure that everybody can understand when it comes to crypto. One of the big things is there's 1,000 types of crypto. Which one should you pick, right? So, me being in it for a long time, I could tell you some of them are gonna look enticing. You say like, hey, this is under a penny. You guys projected to be go up a lot. X, Y, Z, X, Y, Z. I just want you to stick to the top 10. And these top, well, not even the top 10. I would want you to stick to these four. The four that I would want you to stick to. We're looking for the longevity, right? So I want you to stick to Bitcoin. That's BITCOIN, or you will find it as BTC. I want you to stick to Ethereum. That will be, or ETH, which is the same thing, Ethereum. I want you to stick to XRP, which is from the company Ripple. And last but not least, I would say is Solana, SOL, Sol. Those are the only four that I would recommend. The reason being, there's a lot of companies and cryptocurrencies that are gonna mix maybe more percentage wise, but these are gonna be the tried, tested, and proved ones that more than likely will survive in the future. And that is for the beginners. Now, let's say that you are intermediate and you want to venture out, then we'd have that conversation afterwards. But for the masses, those four main cryptos alone, because do not go out there and start spending it on coin number 6,000 and then you lose your money and then you say it's a scam because it goes down. Stick to those top coins and you will be fine. Trust me, I promise. All right. So last words, like you mentioned, um, the crypto market is a great place for you to start. It is very volatile, but it's also great for you if you want to become an investor. I would say if you have money that's lying around, the best way for you to invest in a cryptocurrency is to set a recurring buy. Basically, every month or every week, whichever you deem possible, you put a amount into that cryptocurrency and let it run for that long period of time. And just continually buying it, and don't stop just because the market is up, or don't stop just because the market is down. put it into those four cryptocurrencies that I mentioned: Bitcoin, Ethereum, Solana, or XRP. Continually buying into it, and you will be good for the future. This is a long play hold. It's not for today, for tomorrow, and it's not for you to get super rich within 2 to 3 days. So with that, I would say continue trying to educate yourself about it, and then go from there and invest. The best time to start is right now.
All right. Thank you. Thank you. Thank you. And as for me, my final words, I would say once again, thank you so much, Mr. Leon Perkins, for coming through. You're doing great things for your people. Continue to do so. If you've watched this, please go ahead and share the live. Let people know about Mr. Leon Perkins. Check into the book, especially if you have young children. Go ahead and show them, start them off early. We're trying to break generational curses and learn things or teach things to our children that we didn't. And this is where it starts. It starts with finance. A lot of people have negative ideals when it comes to money because of some trauma that they've had related to money. That shouldn't stop you from teaching your children better so they don't have to deal with that same trauma. We need money. We use it. We gonna barter, we gonna trade, it has value, so at least learn how to use it. All right. That's it for me, man. I really appreciate you again. Thank you so much. Have a great rest of your evening, guys. That is Mr. Leon Perkins. I'm Jot. This has been Same Difference. Yo, love you. Peace.